Hello, thank you for watching this Money Matters presentation, Loan or Lease. In this presentation, you will learn about leasing cars, buying a car, taking out loans on cars, and just some basic information about cars, car insurance, and how to be the best at knowing that information. My name is Rachel Mason. I used to be one of CVTC's Student Central advisors along with Katie Beck. Within recent months, we have both accepted roles as academic advisors at CVTC. With that being said, Money Matters is going to look different this semester, which if you're watching this is the spring of 2024. We'll be having all of our workshops like this pre-recorded instead of offering them face-to-face or via Zoom. There will be limited events put on by Money Matters. However, Money Matters is not going anywhere, and the new department in charge or taking it over is just taking their time to revamp the programming, come up with more amazing topics, and outstanding prizes for viewers like you. You may hear us talk about moolah, and while we can't give you actual moolah, what we can do is reward you for participating in Money Matters events. Each Money Matters activity, such as a workshop like this, questions of the week, or monthly challenges that are in the weekly, are assigned a moolah amount. Moolah is a raffle ticket. The more moolah you earn, the better chance you have of winning amazing prizes. Today, you can earn $10 of moolah by watching this presentation and completing the workshop reflection. You're now only $5 away from being entered to win one of our amazing grand prizes that vary from semester to semester. Every semester, Money Matters puts on workshops for various financial wellness topics. Each month is a new topic, even with some months getting more. By attending a workshop like this, you will earn $10 in moolah plus be entered to win one of the workshop prizes. If you have at least $10 in moolah, you are eligible for the semester grand prizes as well. The more moolah you have, the better chance you have of winning. While these might not be the most up-to-date workshops and semester prizes for the semester you are attending, please be sure to check out all up-to-date information in the Money Matters page in your Student Commons account. These are a few, and I'm going to emphasize just a few of our past Money Matters winners. For over 7 years, Money Matters have had thousands of students win prizes for attending various Money Matters events and activities. In the past, winners have won Roombas, grills, outdoor patio sets, country jam tickets, hundreds of dollars in gift cards, and espresso machines, and much more. Now let's dive into this presentation. We'll start off with some facts about car sales. Did you know that 41% of car buyers only visit one dealership when shopping for a new car? That 32% of buyers are between the ages of 18 to 24, and that 85% of all new vehicles are financed. Let's find out more. And you may know what a loan is, but we'll just talk about it again. So loan is you borrow money from a lender, so like a bank or another organization that is borrowing the money. You use that money to purchase the necessary item, so in this instance a car. You will repay that loan to your lender in fixed installments, so monthly over a set period. They'll say you have 10 years to pay this off, and then interest will be charged on the money borrowed. So depending on what interest rate you have, interest will be charged on the money borrowed on those monthly payments. And there's loan terms to know, and we want you to be familiar with them. So interest rate. This is the annual fee the lender assesses to borrow the funds needed to buy the vehicle. A higher credit score or shorter loan term generally equates to a lower interest rate. Annual percentage rate, or APR. The APR is the total borrowing cost of the loan, including the interest rate and other fees, expressed as an annual percentage. Down payment. This is you will pay this amount to the lender before taking out a loan. It will be applied towards the total purchase price. The more money you put down, the lower your monthly payments will be, which will in turn lower your interest rate of what you're paying on that. Loan term or repayment is the period window of time during which you'll make payments on that loan or auto loan in this case. Principal, this is the amount you are borrowing to purchase minus the interest rate and fees. The principal plus the down payment equals the cost of that item. For here, the car, and then the total cost of the loan. This figure includes the principal, interest, and fees paid to acquire the vehicle. We promise this isn't a vocabulary lesson, but there's so much that we want to share with you that we think you should know. So car insurance. Auto insurance or car insurance is a contract between you and the insurance company that protects you against financial loss in the event of an accident or theft. In exchange for you paying a premium, the insurance company agrees to pay your losses as outlined in your policy. In Wisconsin, motor vehicle liability insurance is required. Basically, liability coverage is a part of your car insurance policy and helps you pay for the other driver's expenses if you would cause a car accident. It does not, however, cover your own. It's important to note that there are two types of liability coverage: bodily injury and property damage. Depreciation, the rate at which your car loses its value from the second you bought it. In fact, the cost of your new car drops as soon as you drive it off the dealership lot. Cars lose their value over time. Certain factors will influence how much they depreciate. Make and model, the age, condition, mileage, owner history, and even the vehicle's color may affect your car's value. A new car will typically depreciate much faster than a used car. But staying on top of your car's maintenance needs can preserve its value for longer. There's no predetermined rate at which a vehicle will depreciate. Within the first year, many cars will lose up to 20% of their value. After that, they may lose about 15% or more per year until that 4 or 5 year mark. Dealership. A car dealership or car dealer is a business that sells new or used cars at the retail level based on a dealership contract with an automaker. Car dealerships also often sell spare parts and automotive maintenance services. A fair market value is the highest price that a willing buyer would have paid to a willing seller, assuming, number one, that there's no pressure on either one to buy or sell, and number two, that the buyer and seller are fully informed of the condition and quality of the car. Pre-qualify. Pre-approval means a lender has reviewed your credit report, not just the score, and other information to determine a loan amount and rate you're likely to receive. Pre-approved quick facts. That hard credit pull, you'll likely get offered the rate and meet the lender's criteria. Registration. A vehicle registration officially certifies that a vehicle can be driven on public roads and that connects a vehicle to both a state and an owner. Taxes. It's money that you pay to the government so that you can drive your car on the roads. Did you know that the car sales tax in Wisconsin is about 5%, and that applies to any car purchased new or used? The title, a car title, is a legal document the state government issues to demonstrate who owns the vehicle. A title includes official information about the vehicle and the owner. A car title differs from vehicle registration and proof of insurance. It's strictly proof of car ownership. You can obtain a title by purchasing the car outright, paying off an auto loan, or being the recipient of an ownership transfer. You should store your car title in a very secure place. And finally, trade-in value. Trade-in value means precisely what it sounds like: how much money you'll get for your car when you trade it in at a dealership. Say you owe $15,000 on a car and the dealership is only offering you $12,000 to trade it in. If you sell, that means you'll immediately have to pay $3,000 to your lender. If you have the cash to cover the payoff amount of your loan, that is fine. And we talked about a little earlier, but there's parts of a loan. Purchasing a car typically means taking out a car loan. If you are in the market for a new vehicle, you probably have spent a lot of time researching car options, but do you have a good understanding of how car loans work? When you take out a car loan from a financial institution, you receive that money in a lump sum. Then you pay it back plus interest. Don't forget interest over time. How much you borrow, how much time you take to pay it back, and your interest rate all affect the size of your monthly payment. There are three major factors that affect both your monthly payment and the total amount you'll pay on your loans. And that is the loan amount. It can significantly be less than the value of your car, depending on whether you have a trade-in vehicle and or making a down payment. The annual percentage rate, or APR, that's the effective interest rate that you're paying on your car loan. And then the loan term is the amount of time you have to pay back that loan. Typically, we see 36 to 72 months. So that's a part of a loan in relation to a car. So how does a lower loan amount, a lower APR, and a longer loan term affect monthly payments? A lower monthly payment always sounds good, but it's important to look at the bigger financial picture. The lower payment could also mean you're paying more for your car over the life of the loan. And why would you think that is? Let's see how adjusting each of these three factors could affect your monthly payment. A lower loan amount. So let's say you're considering a $25,000 car loan, but you make a $2,000 down payment, or you're negotiating that price down by $2,000. Your loan amount becomes $23,000, which saves you $44.27 per month, assuming you have a 3% interest rate and a 4-year term. A lower APR, so consider that same $25,000 car loan, and let's assume it's for a 4-year term. One financial institution could offer you 3% APR and another offers you a 2% APR. Taking that lower APR will save you $10.98 per month. Then a longer loan term, extending that $25,000 loan from 4 to 5 years lowers your monthly payment by $104. But you'll end up paying $391 more in interest charges over the life of that loan. So it's important to think about the long term of your loan, lowering the amount and trying to budget to pay that off sooner. Now, what is a lease? So it's a type of auto financing. It's like rent a car. You make monthly payments over a time frame. So a car lease is a popular type of auto financing that allows you to rent a car from a dealership for a certain length of time and amount of miles. You'll typically make monthly lease payments on a vehicle, and then the dealer in exchange allows you to drive it. And then at the end of the lease, you either return the vehicle to the dealership or you buy out your lease if you want to keep the car, if that's an option within your lease. And here's a few more vocabulary, but it's all related to lease terms. So buyout price, this includes the residual value of your vehicle at the start of the lease, the total remaining payments, and possibly a car purchase fee, and that depends on that leasing company. Excess mileage charge. So these charges occur when the mileage limit of a lease vehicle is reached. Typically, the contract for the lease vehicle includes a total mileage limit up front. If the vehicle's mileage exceeds the limit specified at the end of the lease or that period, the leasing company will charge a mileage fee. Usually the lender will charge based on a specified rate per mile over the limit. Excessive wear charges, it's a charge the leasee has to pay to refurbish the car for any damage that goes beyond normal use. This means you're allowed some wear and tear to be showing on the vehicle, but not any more than the manufacturer deems okay. A lease extension refers to a legal agreement that extends the term of an existing lease or rental agreement. Extensions are not a requirement in a business relationship, but are often granted just before an original agreement is set to expire. Lease payment. Lease payments are regular, often monthly, fees paid for the right to use the property or rent the car, and you may enter into a lease agreement for the car with that manufacturer or dealership. Most leases limit the number of miles you may drive, and that's often 12,000 or 15,000 miles per year. You can negotiate a higher mileage limit and pay a higher monthly payment. And if you know you're going to be traveling a lot, when I was in college, I leased a car and I drove back and forth to my hometown in Minnesota, so I knew hitting that 12,000 was going to probably happen, and I want to make sure I wasn't overpaying. You may drive as many miles as you want, but the higher mileage will reduce the vehicle's trade-in value or resale value. And the reason for a mileage limit, vehicle leases include a mileage limit because the residual value is based on the expected mileage. You know, more miles reduces the value of the vehicle, and it decreases the value and puts more wear and tear on that car. And then finally, open-end lease. In an open-end lease, you are responsible for the vehicle's value, and that is any deficiency between the realized value and the residual value. Both types of leases calculate an amount of projected depreciation, which then becomes the basis for calculating your base monthly payment. You got that all? So when we're going now, you know the terms, the legality, and that paperwork information. You want to know, what are the pros of buying a car? So pros is you own your own car. You don't have mileage limits. You can customize it. Once that loan is complete, you don't have any more payments. You get that seller trade-in when the loan is complete, and you can refinance as needed. So with reliability, what you see is what you get. Reliability is one of the perks of buying a new car because you will be the first owner. It provides a peace of mind and a sense of security. There's no need to worry about hidden flaws that maybe weren't mentioned in a used car sale. Plus, a car will typically come with a 3-year, $36,000 mile warranty. Buying a new car is easier than buying a used car. Just determine the make and model you want and start shopping. Year-end sales events, 3-day holiday weekends, and the end of each month have traditionally been the best times to get great deals on new cars. There's better financing options. Dealers know that everyone loves a new car, plus they have sales quotas to meet. So for these reasons, you may find dealer incentives on new car loan financing and benefit from a low to 0% interest rate. There's high standards. New cars have all of the newest safety features such as blind spot alerts, automatic emergency braking systems, stolen vehicle tracking software, 360-degree safety view cameras. So you do have what is the highest and most elaborate of safety standards, and you have the latest technology that could include higher fuel efficiency, lower emissions, wireless smartphone charging and connectivity, remote start. So there are pros of buying. And while it feels good to drive away in a brand new car, one of the biggest cons of buying a new car is that they typically cost more than used cars depending on the make, model, and features you choose. You'll pay more to have the latest technology and safety features. Buying a car that's 1 or 2 years old can still get you some of these perks at a lower cost. Depreciation, the value of a new vehicle drops about 15 to 20% in the first year of ownership. Over the next few years, it's going to keep going down. So the value of your car is depreciating while you're putting more mileage on it. Well, yeah, it again is initially higher than the used car. With a used car, you'll pay less because the car has already depreciated in value. Auto insurance for new cars can be expensive because of the comprehensive and collision coverage required by lenders, and that average annual cost is nearly double that of liability alone. And that car insurance is so expensive because of the cost of repairs or replacement if stolen. And then even if your car is older and paid for, insurance can be higher when you carry full coverage to cover an accident. The down payment, you have to put a lot down to get that. You don't know what cars are going to be like in the future. And then knowing manufacturers' warranties will end, so not always relying on that. So if you're getting things in that 3-year or $36,000 mile warranty, knowing that once it's up, you'll be having to pay out of pocket, most likely for those repairs, plus have those higher payments and interest rates because you bought that new car. And let's get to the pros of leasing or renting a car. Some people choose to lease a car because it allows them to drive higher end cars for a more affordable monthly payment. Plus, a 2 to 3 year car lease allows drivers to easily and frequently upgrade their rides. The monetary perks, of course, not everyone leases because they want luxury wheels. People lease because they want lower down payments, they want warranties and free routine maintenance, and those are some of the benefits you get when typically leasing a car. Leasing helps protect you against unanticipated depreciation. If the market value of your car unexpectedly drops, your decision to lease will prove to be a wise financial move. If the lease car holds its value well, you can typically buy it at a good price at the end of the lease and keep it, or you can decide to resell it. Some drivers fall in love with their leased cars and decide to buy them. You can buy the lease car at the end of the lease term. That price is generally the car's residual value plus any processing fees. Buying a leased car for less than its current market value could be a good financial move. You can transfer your lease to a new driver. So if you don't really love the car you've leased, you don't have to be stuck with it. Just make sure your contract allows you to transfer the agreement to a new driver for the remainder of its term before you sign that lease. Just note your financing company may charge you a lease transfer fee that could amount to several $100s. But if you'd like the ability to opt out of a car you don't want to keep, leasing can provide that option if you ask for it. And cons of leasing. The obvious downside to leasing a car is that you don't own the car at the end of the lease. That means you don't have a trade-in if you decide to purchase a car. Consumers who routinely lease cars over many years may end up paying more than they would if they had initially bought a car. It may not save you money. You can break an auto lease, but it will typically cost you a hefty fee. Yes, you can sign a long-term lease, but they may negate the monetary benefits of leasing instead of buying a car. And that's because leasing typically costs you more than what you have taken out in a long-term car loan. So do the math to figure out if the numbers work in your favor to sign a long-term lease. It can be more complicated than buying a car because buying a car is pretty straightforward compared to leasing. When leasing a car, you're typically paying for the car's lost value over the term of the agreement, plus a set of fees. Lease contracts can be complex. So to find a good deal, study your contract carefully and ask questions about anything you don't understand. We have talked about that miles restriction, but every lease agreement has a stated number of miles you are allowed to drive without paying a penalty. If you exceed your limit, you will be hit with an excess mileage penalty that can add up fast per mile. Typically, leasing a car does increase your insurance premiums because you're required to purchase full coverage to ensure that there are sufficient funds available to repair that car in the event of an accident. The entity financing the vehicle typically requires this because they have a financial stake in the car. So knowing that increased insurance premiums will happen, and then credit scores may get dinged because of that, and going lower because you don't actually own it, but you're making payments on it. But again, in return, it can go up. So knowing that there's pros and cons of buying and pros and cons of leasing. And then when you're getting towards the end of your lease, ask yourself these questions. Should I buy my lease car? Do you like the car? Do you enjoy driving it, and does it suit your needs? This may seem like a funny question, but consider your lifestyle. If you lease a small compact car so you can easily maneuver through traffic, but now you're moving to a rural area where you may need a vehicle that has more sturdier road handling capabilities, you may find that your compact is not as suitable for your new location. And then on the other hand, you may not want to drive a large SUV if you're moving to a congested suburban area. So thinking about that, are you happy with the car's performance? What's the gas mileage? Is the car often in the shop for warranty work? Analyze how much the car's upkeep will cost you if you do buy it. If you decide you'd like to buy your lease car, look at that residual value. How much is the car worth, and how much would you pay to get out of your lease before it expires? There are various strategies to help save money when buying your leased car, and this includes financing through your bank or working directly with the lender, the creditor that owns the car. And if you do decide to lease the car, explore all your options. Don't just go with one. As with most financial decisions, the pros and cons of leasing a car come down to a host of factors. Analyze your needs and budget, and then shop to make sure you make the right decision for you. So there's steps on buying a new car, and first one is setting your budget. Start by deciding if you want to pay cash or take out a loan for your new car. Paying cash makes your budgeting process pretty simple, but don't spend all of your savings. And remember that you will always have to pay sales tax, registration, and insurance fees. Taking out an auto loan, and that was on the first slide, 85% of buyers do that, is the most common option, but make sure to research financing ahead of time. This will help you get the best deal during the negotiation. Use a car payment calculator to figure out the right monthly payment for you. Key is try to spend less than 15 to 20% of your total take-home pay on your car expenses, but ultimately select the best interest rate and shortest loan term you can handle. Test drive the car. What do you like? What are you interested in? Do you have a good feel for the different models? Keep in mind that set aside a morning or afternoon for the process, and do it midweek when dealerships aren't too busy. Call ahead and schedule an appointment. That way the right car and model will be pulled out ready to go. Test out a bit of everything. So hills, rough pavement, curves, even a stretch of highway. Now, due to the new car shortage, this may be hard to find what you want on the lot, but do ask. And also, if it is wintertime, that would be another one to look, like how does the car drive in the winter? Research your car and identify your must-haves. Once you know what you can afford, you can begin comparing options that might be best for you. Consider how you plan to use the car. Do you have a family? You want to make sure you have enough room for everyone, plus ample cargo space. Do you want to take it hiking? Do you want to do off-roading? Make a list of must-haves, and this will help you narrow down your options. Find the right price. Pricing guides such as Kelley Blue Book allows you to cut to the chase and find out what other people in your area are paying for the car you want. Compare prices on companies' websites. Input the car options you want. Note that factors like color, for example, can affect a car's price. And then if you like what you see, are there any incentives or rebates available for the car you want? Most manufacturers' websites list current offers, which typically change each month. Get dealer quotes by requesting dealer quotes by email. This can take the stress out of negotiating. You can ask for a price quote by emailing the dealership or using a third-party tool such as TrueCar that lets you quickly request quotes from multiple dealerships, and then compare the seller's asking price to the average market price, and this will help you determine what you want in the pricing guide. Maximize your trade-in value. If you have a car to trade in or a lease car to trade in, make sure you're getting the best price for it. You can use online pricing guides and appraisal tools to determine what your car is worth. Make sure to fill out everything accurately, as certain features and options can add more value. And then seal the deal. If you're negotiating by email or phone, you can ask to have the car delivered to you rather than picking it up at the dealership. Note that not all dealerships offer this service, and it's typical for buyers to sign papers in person. But before you sign the papers, keep in mind that even if you have been pre-approved for a loan, the dealership's finance manager may offer to beat the terms of the loan. It doesn't hurt to see if you can get a better interest rate. Just make sure all the other terms of the loan are the same. Before the contract is drawn up, that finance manager may try to sell you additional products and services. So by buying an extended car warranty at the right price can provide peace of mind. First, check the terms of the warranty that's included already with the price of your new car. Most new cars have a bumper-to-bumper warranty covering at least 3 years and 36,000 miles, along with a powertrain warranty that typically lasts up to 60,000 miles. Don't pay for that if you're already getting it, and then take your time reviewing it. Do not let yourself be pressured into signing it just to get over with it. The contract will include the agreed on sales price and additional fees like state sales tax, that documentation fee we talked about earlier, and registration fees. And if you're in the market on buying a used car, there are steps as well. Know the buyer's guide, and that is a written document that tells you about the used car. It tells you if the dealer is selling the car with a warranty, or if the dealer is selling the car without a warranty, or as is. If a dealer is selling you a used vehicle away from the dealership, you may have a 3-day cooling off period in which you can return the purchased vehicle. But if you buy a pre-owned car at the dealership, you sign a contract under which you may have to pay a penalty of up to 5% of that total if you want to return the used vehicle. There are many websites that list used cars, some of which have a car buying app. If you're shopping on your phone, consider these online car buying retailers and marketplace. So like AutoList, AutoTrader, and a used car search pro. Auto retailers like CarMax, Carvana, and Vroom have car buying apps. Traditional private party like Facebook Marketplace and Craigslist are popular if you're looking to buy a used car from a private property, but be aware that sellers are often looking to make a quick sale. So while it's possible to get a great deal, be careful about scammers. Once you find a viable car option that's right for you and that's within your area, but before you physically inspect it, look up that car model in a Kelley Blue Book, and you can use that guide to estimate the market value of the actual car you're looking at, and then assess its conditions based on factors such as age, mileage, and options. A vehicle history report. This gives buyers information about a car's past, including title information, any major accidents, how many past owners, mileage, and more. This report also will show if required maintenance was done on time and where the work was performed. In some cases, online listings will include access to free vehicle history reports, but most dealers have subscriptions to vehicle history report services and typically provide them for free. Car shoppers should always test drive a car before buying it because it can alert you to any potential problems a vehicle might have, and this might help you decide if it's worth buying. It also allows you to give the car an initial inspection before taking it to a mechanic. Keep in mind while test driving, when you're starting the car, all the warning lights should turn on for a few seconds, then go out. At the very least, check for the 4 most important car parts: the engine, oil pressure, brakes, and airbag. Select a test drive route that has a little bit of everything: hills, rough pavement, curves, stretch of highway, in the right weather, snow. Check for visibility, particularly if there are any blind spots, how the car accelerates and stops, how are the brake brakes responsive? Are they predictable? What is the ergonomics? Check for any mechanical conditions. Is there any weird noises, vibrations? This could indicate worn suspension or tires. And then get the car inspected from a mechanic. And if you really like the car and it seems like a good condition, you should still take it to a mechanic. Used car inspections can cost between $100 to $300 depending on the mechanic. Both private party sellers and dealers should allow inspections. If a seller pushes back, claiming that they've already inspected it, that might be a sign it's not trustworthy. And then negotiating with any seller can be daunting, but come prepared and have a good idea of what the car is worth. It can be easier. Comparing and contrasting, showing them what the prices are at different locations. Start low, but in a ballpark, not too low. If you lowball, they won't treat you as a serious buyer. Instead, make an offer on the low side, but still enticing. Negotiate slowly and repeat the numbers that you hear back. Ask about fees before saying yes to a deal, and always be ready to walk. If you aren't making progress towards a deal or you don't like the way you are being treated, just walk out. You don't need an excuse. I'm not going to buy is good enough. So what is a buyer's guide that you're talking about? And that is, they have to display in every used vehicle for sale, and you have to give it to buyers after the sale. So it'll include any major problems to look out for. Is it being sold as is or with a warranty? Get all these promises in writing. What percentage of the repair cost, if it's got the warranty, will the dealer pay? Ask to have the car inspected by an independent mechanic. Get that vehicle history report. Very important, ask for a Spanish buyer's guide if the sale is conducted in Spanish or any other language if you don't feel comfortable. Get the dealer's contact information, including who to contact for complaints. And then spoken promises are difficult to enforce, so write everything down, have everything in paper, and know what a buyer's guide is. And can you lease a used car? It is possible. Examples of a franchise dealership could be a BMW or Toyota. Lease here, pay here dealerships tend to lease used vehicles to people with bad credit, but these leases are often filled with gotchas and adding more money to your monthly payment. And then it's generally best to avoid leasing from these type of dealers because you don't want to be paying more money for something with all those extra fees and what it's worth. So there are true costs of buying a car and extras. Are they charging you for extra protection? What are finance charges? What for running your report, running your car, working with a lender? What are they charging you? What's a registration fee for getting the registration done? What's the sales tax, especially in the state you're looking at? Are there service plans? Seeing what those little extra costs are going to add up to and making sure everything is legit and that you feel comfortable with those costs before signing anything. And there are true costs to leasing a car. Like buying a car, there's documentation fees, so running the paperwork, the office work, there's leasing fees, a license fee, registration fees. So you may be able to afford everything right up front, but knowing when leasing or buying a car, those extra add-ons that are needed to legally purchase the car, that is going to add on to that cost. So if you're budgeting for $15,000 and you can't afford anything above purity at your highest end, think about those prices as well. It's so important that anything you're doing, financial or just in general, is that you're reading the fine print. If something sounds too good to be true, then it probably is, especially when it comes to auto loans. The notorious yo-yo financing means that you're offered one rate when you initially discuss the loan, only to have that rate not apply to you. This tactic is also referred to as spot delivery. The dealer will tell you that you are free to take the car home even though the paperwork is not finalized, only to call you several weeks later to tell you that the paperwork fell through and you need to renegotiate. When you come in to settle this, they will change the terms and you may be left with less than a desirable rate and car loan contract. You want to read the contract carefully to ensure that the rate the dealer tells you is the rate that is actually listed in the contract, and that the financing paperwork is 100% complete before you leave with your new car. Yo-yo financing is illegal in many states, but not in all states. So it is something you need to very much be aware of before you get a car loan. And again, if a rate sounds too good to be true, it probably is. It's very common to see deals advertised as only available in California, New Jersey, Florida, and these deals usually exclude a lot, as in most states. So it's important to ensure that the deal you're offered at the deal you think you're getting are actually valid in the state that you are in. You may be under the impression that you're agreeing to one term or rate, but then that contract comes back to have something else listed entirely. And then car add-ons. One of the most common practices in dealers is to add on purchases and products to your car loan. These add-ons include gap insurance, VIN etching, tire and wheel protection, paint and fabric protection, key protection, credit insurance, extended warranties. And while these may be something that you're interested in, you need to make sure that they are not listed in your contract without your knowledge. You can usually cancel these add-ons before you sign, but doing so can be complicated and annoying. Additionally, you could ensure that the car does not have unnecessary features added on without your knowledge. Car add-ons can very quickly cause your car loan to increase by thousands. These upgrades can include all weather mats, high-tech security features. Some of these might be features that you want, but you need to be sure that the specific features you want are included in that contract. And we put a lot of information at you, and we hope that you took something away, whether it's vocabulary or thinking about buying or leasing a car, the pros and cons, that you understand what you are getting yourself into when you make these decisions, because if you haven't done it, it's probably something in your future. And if you have any other questions, reach out to a dealer, someone you trust, and figure out what's the best. And if anything's too good to be true, it probably is, and read that fine print. So don't forget to complete that recording reflection in either the email, the weekly, or it's on that Money Matters homepage under Money Matters series in your comments to earn the $10 in moolah. Thank you so much, and you have a great day.